Is hiring your kids through your business actually legal, or is it a fast track to an IRS audit? The answer might surprise you. Yes, it is 100% legal, but only if you do it the right way, and most business owners do not. I am Noura al-Masri, a tax accountant and the founder of Noura's Books. And today, I am walking you through exactly how to do this correctly, step by step. Here's why this strategy works. When you pay your child a wage, the wage is a deductible business expense, so it lowers your taxable income. Here's where it gets really powerful. If you are an LLC or a partnership made up of just you and your spouse, children under 18 are exempt from FICA taxes, which is the Social Security and Medicare, and on your child's end, in 2026, the standard deduction covers up to $16,100 in earned income. That means they could owe $0 in federal income tax on that amount. You deduct it, they owe nothing. That is a real strategy. Now, let me tell you what goes wrong, because I see these mistakes all the time. Mistake number 1, no real job. The IRS requires that the work be legit, age appropriate, and actually connected to your business. You're 10 years old, can create social media content, help with filing, take product photos, assist at events. They cannot be a VP of strategy. Write it down. Make it real. Mistake number 2, paying the wrong amount. The wage has to be reasonable, meaning it's comparable to what you would pay someone outside your family for the same work. Overpaying or underpaying both create problems. Mistake number 3, no documentation. This is the one that kills the deduction in an audit. You need timesheets showing the hours worked, a written job description, and proper payroll records. Pay by check or direct deposit, never cash. This is non-negotiable. You need to show proof. So here's how to actually do this. Step 1, write a real job description with a job title. Step 2, research what that role pays in your area and set a fair hourly or flat rates. Step 3, add your child to your payroll system. Yes, a real payroll system, and issue a W-2 at the end of the year. Step 4, keep timesheets that records of what work was done. Step 5, if your child earns above the filing threshold, they file a tax return. Make sure you file your child tax return at the end of the year, regardless. Step 6, and this is the bonus move, consider putting some of those earnings into a Roth IRA for your child. Your child can contribute since they have earned income each year, and that money grows tax-free for decades. Before you run with this, here is a critical detail most people skip. The FICA exemption I mentioned that only applies to LLC and husband and wife partnerships. If you operate as an S Corp or C Corporation, your child is still subject to FICA taxes. The income tax savings still exist, but the math changes. This is exactly why the structure of your business matters, and why a strategy that works for one business owner might not apply the same way. The income tax savings still exists, but the math changes. This is exactly why the structure of your business matters, and why a strategy that works for one business owner might not apply the same way to another. Here's the bottom line. Paying your kids through your business is a legit, well-established tax strategy, but it has to be done right. Real work, reasonable pay, proper documentation. Do those 3 things and you are in good shape. If you want to make sure you are doing this correctly for your specific situation, my team at Noura's Books can walk you through it in a tax strategy session. This link is in the bio. If this video helped you, share it with a fellow business owner who has kids. They will thank you for it. My name is Noura al-Masri. See you next Monday.